Okay, hello guys, welcome back to the channel. It is Hassan again here, and I have Chief JPY on the chat. However, Chief JPY, this is the weekly time frame. We're going to do the analysis for the weekly time frame going through the next week, and I'm going to be giving you the direction for Chief JPY for next week. However, before we head there, I've been getting comments on my YouTube. There's one of the videos, one of the viewers commented, and she was asking, how comes I'm following your videos step by step, however I'm still losing money? So that is what this first thing I wanted to address before we can proceed with another video. But before I do that, kindly guys, subscribe to the channel. Most of you watching this channel are not subscribing. We have around 80% of the people watching the channel not subscribing, guys. If I have 2k unique viewers and I only have 40 subscribers, guys, that's not being fair. So subscribe to the channel so that we can grow the channel together, and I'm also going to be producing more videos like this. So just make sure that you always subscribe, because it helps the channel grow and also gives me enough encouragement to make videos like this. So before I go into that, guys, let me give you 5 seconds as usual. You subscribe and then we proceed with the video. So guys, subscribe. Okay, so I hope you have subscribed to the channel, so we can go straight to the video. You can always turn on a notification bell so that if I do videos like this, you can be able to take advantage of them. So today I'll be giving you the direction of Chief JPY going into the next week, so stay tuned. Also, we shall create the storyline live. Okay, that being said, let's jump into the video. So I'm going to start with what one of the commenters asked. How comes I'm following your video step by step, but I'm still losing money using this strategy? Okay, there are many reasons as to why you're going to lose money in forex. It doesn't necessarily mean that the strategy you're using is not good. It does not also mean that the strategy does not work. Or it sometimes doesn't even mean that the prediction of the direction was wrong, or that what the strategy was giving you was wrong. There are very many reasons that you would lose money in forex that make people quit, because it is not entirely tied on the strategy. There are a lot of things that come in handy with learning and being effective in forex trading. But one of the things I want to debunk, or one of the things that I want to remove out of those things that will make you fail in forex, is the issue of not having enough funds. That one, just remove it, because it does not matter whether you have a $100 account. It does not matter whether you have a $20 or $10 account. It does not matter whether you have a 100k account. For as long as you don't have a good strategy, you don't know how to risk manage, you cannot control psychology, you're always going to lose money. Whether you have a big account, whether you have a small account, you're always going to lose money. What really matters is, me, I've grown an account of $20, $27, $28, up to around $500. And due to greed, it was wiped out up to around $300. And then, hey, I said, let's first stop there. But it was from $27. So you don't need a lot of money. You just need to know how much capital do I have, how am I using it, what am I risking, how many pips am I risking. If I have $10, how many actual pips will be that in order to wipe out my account, on which lot size. If you have $10 and your potential stop loss is $100, then you have to use 0.01. That way, before the account moves to $100, you can't be wiped out. But you have $10, but you want to use 0.05. you want to use 0.1 mini lot, that is around 10 pips and you're wiped out. 0.05, that is around 10 pips and you're wiped out. Unless you're 100% sure in the trade, which is so unlikely in forex trading, there is no way you're over leveraging. So I don't know exactly what she's doing in the wrong way, but what I'm sure of, it is these other aspects that are making her lose the money. And if I say it is these other aspects, what do I mean? I mean things like risk management. I mean things like psychology, the major things. You can also talk about not knowing the fundamentals, especially if you're trading on lower time frames. You should be very well conversant about the fundamentals. When are the news coming out? When is CPI coming out? When is NFT coming out? Last time we had, I was in a GBP USD trade, and then the UK Central Bank released some news about the Great Britain sterling pound, and it was supposed to go down, but things just turned around, and the way it was shooting up from 120 pips to around 40 pips. I had to close the trade. But if I had known that the news was going to come out, I wouldn't have lost almost 80 pips. I wouldn't have lost almost 80 pips. So you have to be, there are a lot of things that come in handy. Why we prefer the high time frames, we who trade the high time frames, it is because the high time frames will always try to overlook some of the fundamentals. For example, if you look at this chart here, this is a weekly time frame from Feb 2019 to May 2025. That is around 4 years. Do you see any spikes that can relate to news and you would have been stopped out if you looked at this chart? Someone would say no. Yes, I would agree no. But I would say yes somewhere. Why? We have this indecision candle here. You see this week from up to down? This must have been some news from up to down. We also have this one here, short up, short down, and then remain in the middle. We also have this one. We also have this one. We also have this one. I think that is all. So now, why do I say you wouldn't have been stopped out? If you entered here, you did your top-down analysis, and your entry was around here. Even if this spike happened, you are not going to be stopped out. Same thing with this. If you did your top-down analysis and you entered from here or here, even if this spike happened, you are not stopped out. Same thing with here. If you did your top-down analysis and you entered from here or here, if you entered from here, stop loss is definitely below here. This spike wouldn't affect you. But I want you to think about people who were trading. You see, this is 1 week of price action. I want you to think about people who were trading within this 1 week. What do you think they were going through? People who were trading within this 1 week of price action, from Monday to Friday of this week. You entered a buy from here, it went up. Before you even hit your TP, it came down. You entered a sell, it went down. Before you did anything, it came back up. That is 1 week of price action. Whereas people who entered from here, this week gave them profits, and then this one gave them profits up to here, and then started retracing back. They had moved their stop losses around here. So their sell would be, as long as it does not reach here, I'm still in the trade up to here. That's why we prefer the high time frames. But it doesn't mean that people on the lower time frames are not making money. I know people are constantly making money on the lower time frames, but the high time frames are more accurate than the lower time frames. So I don't know what sister is not doing well, but maybe if we can say, I would say that maybe it's not taking into account the fundamentals. Maybe is entering too early before even the trade materializes, especially on the entries on the lower time frame. Remember, I told you enter using supply and demand on 4 hour or 1 hour. So maybe she's entering before the trade can materialize on the lower time frame. You know, you can enter the trade early, your stop losses get hit, and then the trade proceeds in your direction. And then you start asking yourself, what am I not doing right? Or maybe the daily has not yet made a clear storyline. Let's say the break of the previous low or the previous high has not been affected on the daily, and then because we're seeing it going down, we go to the 4 hour to look for entries. That is what I think. But I actually, if you follow this strategy step by step, you're going to win. Okay, so I wanted us to start with correcting or highlighting the storyline thing before I proceed to uh, the prediction of next week. Okay, so now we have Chef JPY. Guys, I hope you have subscribed to the channel. We have Chef JPY here. And you see, this week is what we are going to concentrate on this week of 31st March 2025. So what you're going to concentrate on, because it closed as a rejection on this previous support, previous resistance, which turned into support. You know, when support is broken, it turns into, when resistance is broken, it turns into support. So this support here is what we are going to focus on. So as we focus on this support, we're also seeing this week rejecting on the support. So you come to the line chart, just look at the support here. Then we had a low, and then a higher low. We made here a support. So now we are looking at this support to be retested to shoot price to the moon. Okay, guys. So now what do we have here? We have this week rejecting and closing as a rejection. Let me just mark it here with the blue line such that we can all see it. Let me remove this. So we have this week here rejecting and closing as a rejection on this support, and we said support resistance broken turns into support. If it is made fresh and fresh, it is made fresh by this closure of the candle above here, so we can still come and retest and use it for a storyline creation. So you retested here, you are retested here, and now we are going bullish. So now after this week closed, we go to the daily time frame. It's just a quick recap, guys. We go to the daily time frame. Go to the daily time frame. So what do you see on the daily time frame? On daily time frame, me, I can see a lot of things. There is a supply zone here, demand and supply zone here, which showed price up. There is a break of structure here. We break structure. We created also a demand here, demand zone with this candle here. If you entered here, you would have gotten some pips. If you entered here, you would have gotten some pips. However, we could not enter here. Why? Because we needed this wick that was created or was closing to give us a storyline. So what do we have here? We have a high, a low, a high, break this high, a low, then this high. So this storyline with the other wick, which started from here, 1, 2, 3, 4, 5, was being created using this high here. So now me, I would enter, for you would wait until the break of this structure here, but me, I would enter here because now at least I know the things. I know the high time frame is the one that broke this resistance. Let me put the line chart. You see this resistance here, 1, 2, 3. It was broken by the high time frame, and if resistance is broken, it will come back to be retested and then we go up. However, we shouldn't just cram it that it will be retested and go up. Let's use supply and demand. And also, after being broken, we formed, this is a shoulder, this is a shoulder, this is a shoulder. We're coming back to form another shoulder, and then we shot up to the moon. Guys, things are looking simple and juicy. I hope you learn this strategy. It is going to help you a lot. So now resistance was broken, it has to turn into support. That means price will come and retest this area and go up. However, we want to enter on supply and demand. We won't just enter simply because price will come and retest. It might retest and go through. We have to have a reason for entry. So what is the demand zone, the correct demand zone? That is, we must have an indecision candle and an engulfing candle. Here we have an indecision candle. This is a big engulfing candle, huge move away, creating this supply zone, the supply zone here with an imbalance in the middle. So we are going to mark this candle here. It also broke structure. It has to break structure, guys. It is a must. Structure has to be broken. So structure has broken from here. We created an imbalance. We have an indecision candle and a bullish engulfing candle. So we want this candle here. We want this price action to come and fill the supply zone, and then we shall be buying to the upside. So we'll create there. You see, come price came and tapped in and then shot up. If you had put your position size calculator here and put your stop loss slightly below here, that would be how many pips? To 150 pips. On 0.1 lot size, that is $150. On 0.01, that is $15. And what is your target? Now, this is where the magic happens. Your target is coming all the way up to the next supply zone. Here I don't see any that is not retested, but we can just put at the previous high, because we know that price will come and sweep the liquidity at this previous equal highs. So we put slightly below. Now look at the risk to reward, guys. This is where the game happens. You're risking $150 to make $698. That is $700. What the risk to reward is 4.5 is to 1. 1 is equal to 4.5. So guys, that is $150 to make $700. That is the risk reward that I would take any day. So what do you have to do? You just have to reduce your lot size. So you risk $15 to make $69. That is $70. That is a high risk to reward. Hold your trades until you reach there. And even price, when it came here, it gave you another entry. When price reached here, gave you another entry. This is like that. So people who missed this entry here, you got another entry here. This is rally, base, rally. So we have a decision candle and engulfing candle. We just mark this and wait for price action to come, and then we target the previous the next supply zone or the previous high, because we are in an uptrend. So here you had another entry, $172 to, that is to $300. So you're risking half to get twice as much. This is 1:7. Me, I would take it because I know that price will go there. However, I would not advise most of you to do it, because the risk to reward is not that supporting you. Okay guys, so I hope you have understood something from this. It is all about playing with your risk to reward. It is all about knowing where the market direction is heading, and put the stop loss, kindly put the stop loss according to market structure. Don't put the stop loss according to what you don't want to lose. Some people, what they do is they go to the charts, identify the direction, get the storyline, go to the lower time frame, identify the supply and demand zones, and then according to the supply and demand, it is telling them that the entry should have a stop loss of at least 100 pips. So now to them, they want to use a lot size of 0.1, the mini lot, but they don't want to lose $100. So what happens is they will use 0.1 and then make their stop loss tight, risk around 50 pips. Yet, according to market structure and price action is telling them stop loss has to be 100 pips of this trade. It has to be 100 pips. So for them, they ignore what market structure and price action is telling them, and they want to insert their stop loss. They say, no, I want to make more, but risking less, disregarding what price action is telling me. So that is like eating your cake and having it at the same time. You want to make more money, but risk less. So what happens is you're going to have a stop loss that is not in line with price action. It will be hit and price will go in your direction. Yet what you would have done is have that enough stop loss. If price action is saying 100 pips, have like 105 pips. To put into account for the weeks, 105 pips. Now, since you don't have enough money, reduce your lot size. Use 0.01 if you want to lose $10. If you want to lose $30, use 0.03. You want to lose 50, use 0.05. That is how we trade. You'll win a little, but it will be guaranteed, instead of wanting to win more, which is not even guaranteed. So So guys, I think that is all. So now what I will do, I will take you through, I'm going to be taking you through Chef JPY for next week. That was just a recap of what happened. This is a trade that I called. You can check my videos. It moved on well. If you were hit, I'm really sorry, but check into your psychology, risk management. You might be doing everything right, but your psychology and risk management will be disturbing you. And guys, what you have to know is you might be doing everything well. You can literally do everything right, and still your trade does not play out according to your strategy. That is forex. It is designed to make us rich, but not in the short term. It is designed to make us get rich, but not without hustling. Because they knew if we had a strategy that is always going to be predicting win, 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 then everyone will not do any work. We won't even have money now to invest in forex because we won't be doing any work. We will all be doing forex. But every strategy in forex was designed in a way that it will win and it will lose. If it is not losing, they will deliberately make it lose. They'll just make some news there and then you'll see your strategy crumbling and you'll be like, no, but this thing has been working for the last 3 months. Yes, it is still working. It's just that it was your time now to lose. How do you then avoid losses? There are 2 ways of avoiding losses. One is not total avoiding. It is just managing your risk. That when you lose, you do not lose more than you have been winning. So it will not affect you that much. That is one way of avoiding losses. 2, by staying away from the chart, knowing that now I don't understand the price action here. Like for example, price action here is not clear. You have to be so much technical and know like 2 or 3 strategies. Like for me, I know the Alchemist that we're going to use right now for finding the storyline. I know supply and demand. And then I know support and resistance. I know when we come at support, we are going to buy. But before we buy, we need to see something at support. And what is that thing that we are supposed to be seeing at support? Do we have a demand zone at support? Yes. Do we have a rejection at support on the previous support? That is for Alchemist? Yes. Then I'm combining almost 3 strategies to get my entries. However, if you only know one of them, this price action here would not support you trading with support and resistance. This one here, it would help you trade demand and supply somehow, but support and resistance, it won't be working, this price action here. So guys, don't side in to warn you. I've told you everything. If there's anything you'd want to ask, put it in the comment section. Let us proceed. And don't forget to subscribe to the channel. Also like the video if you're really learning something. If you have not learned, I advise that you watch the video once again. If you don't learn anything, then I don't know what I will tell you. Okay, so let's proceed with our analysis for today. So today is Friday 17th, today is Saturday 17th of May 2025, and we have Chef JPY on the screen that we're going to be analyzing. So what do you see immediately on the screen? You see rejection that have been happening on support. First on resistance, this is resistance, this is A resistance, V support. Let me show you guys. I show you the things every day. This is V, this is V, this is V, this is V. V is like this. V, that is V. If you see anything like this, that is V. V, V, V. V is support. Then A, let me just flip this one up. Then A is resistance. So this is A. It's like shaped like A. This is shaped like V. This is shaped like A. A is resistance. V is support. So we can go back. Always watch these videos one more time, but in slow motion. So we can go back. So what do we have here? We have price action that created a V here. So now that V, we have been rejecting it for a very long time. So this is green candle, red candle, resistance V. So we rejected it here. Rejected it here. We came up and then rejected on it. You see this rejection here, rejected on this price action. Let me put this up. You see here, this week rejected on this fraction, and then we had to go down. We went down However, we pulled up and then formed a red candle. So green candle, red candle, another V, forming a double top. Guys, this is a top, this is another top, which is even lower, higher low, which is even lower than this top here. So that is one sign that we are going down. This is a double top on the weekly time frame. You want to know what happens on the double top on high time frames, weekly or monthly? Come and test here. You see, this is a top and this is another top. What happened? We dropped down massively. Guys, don't play with me. I'm giving you premium analysis. You follow my analysis, you're going to have money. You're going to earn money in the forex market. So this is a top and this is a top. And what did this top create? Let me show you. You see, this is a high, a low, a high, a low, and then we formed a QM cell. After forming a QM cell, we come back to retest on the supply zone, and then we shoot down. So I will combine demand and supply, support and resistance, then Alchemist to get my trades. And when I enter that trade, I'm sure at least 80% that the trade is going into my direction. Why 80% and not 100%? Because no strategy is 100%. People who trade demand and supply say it is the only strategy that people should be trading because it moves in line with order flow of the market. Good. I'll go and learn it and I take it. And then people who trade Alchemist, they have precision in entries. They will tell you, oh, you get precision. Yes, it is true. I've used it and it works. I add it to my trading asset. And then people who trade support and resistance, they will tell you support and resistance is where the market respects. Whenever it reaches there, it drops down. And then I'll tell you, okay, it is okay. Give me support and resistance too. So I combine all these things together, and then I find a trade. I just use a few things from each and every strategy, and then when I get a strategy, I shoot it to the motherfucking moon. So now what are we having here? We had supply and demand, and the Alchemist somehow working here with we had and guys, these things are so beautiful. So we had high and a high, this low, and then this low has broken to make a QM sell. And when it made a QM sell, you would have entered a buy here to take it up. Why? Because we have a head and shoulder here. There is a low, there's a low, a high, a low, and then we make a QM buy. So when we make a QM buy, we come to retest this area here to make a left shoulder, a left shoulder on the order block that would be here for demand, and then we shoot it up to this demand here. When we reach to this demand here, we have made a QM sell, so we shoot it down. And now what do we have here? We have a low, a high, a low, and then we have a QM buy. So now this QM buy here looks like it is bringing us down to make another shoulder to make a QM. We are selling to come to here and then make a QM buy. Things are repeating themselves, baby. So here you would have bought, and then we reached here because we're following a QM sell. After reaching here, you have sold. Let me show you. This is a low, a high, a low, a low, a low. And then we make a high. That is a QM buy, isn't it? So now what are we waiting? We are waiting for price action to come on the order block around here, and then we buy, which is also making an inverted head and shoulder, and then we buy. At the same time, we are having a high, and then a lower low. So at the same time, price is telling us that as we are going up to buy on this QM buy, we are also making a QM sell here. So you have high chances of buying around here and then selling down here. So now what do we have here, guys? You learn the things that are going to be easy for you. So now what do we have here? We have with the Alchemist strategy, we have price rejecting on this support and found another support here, another resistance here. This rejecting this resistance, and it found another resistance here, of which this resistance is a lower high of this one here. So we have a high and a lower high, and also making a resistance. So price rejected on this here, price came down, closed here, made a lower high. Now this week that has closed yesterday, it is rejecting on this high here, rejecting on not only on this, even on this. So it has rejected this one, it is rejecting also this one. So to me, That one is the first sign that we are going down. So before you even go to the daily to look for the bearish storyline, look at what happened here. We are at the previous support, for the previous resistance. People who trade support and resistance. Let me put for you here. You see, we tapped here, we went down. We tapped here, we went down. We have tapped here, we have dropped a little, we have come. Now we have come to make a double top on support. A double top on resistance. We have come to make a double top on resistance. You see, this is a top. This is the weekly time frame. Chef JPY, you are making a double top on resistance. You see, double top on resistance. You know what happens at double top? We go down. So now, people who use indicators, I also add for you, but me I use this one just as a confluence photo for a confirmation. Where are they? Where are these indicators? Why are they not coming? I don't know if I've lost my internet, but okay, let me. Good, it has come. So now what do we have on the indicator? This is the awesome oscillator. This one is not showing anything. Let me get the RSI. Let me get the RSI. This oscillator thing. It is good when you're looking at the downer part. The RSI, how do I search this? The thing is not working, guys. How do I bring my RSI? Huh? This is supposed to be here. Something is frozen here, guys. Huh? Guys. I wanted to show you, but the indicator is not coming out. I want to show you there's a divergence here. Price is making an equal high double top, but I'm sure 100% the RSI is making a lower high, a lower high, a high, and a lower high on the RSI. However, it is not coming. I'm clicking, it is not coming. So let's just proceed. So now, having seen a double top, previous resistance, weekly time frame, rejection. There's also demand here. There's also demand zone here. This candle here. I told you the last candle before the impulse, and it is better if it's an indecision candle. There's also demand here. Supply, guys. I'm confused with the things. See you guys. I put in a lot of energy to make this video. So if you watch them, kindly subscribe to the channel. Also like. So we also here see a supply zone here, and then there is a double top. This is a previous resistance. Guys, chances are high we are going down. At least I've built my case to almost now 75% that I'm going down. So what is remaining is to go to the lower time frame, look at what is happening on the lower time frame, and see where we are heading. If this price wanted to go up, it would have just pierced here and come into this supply zone up here. But it has been here for 1, 2, 3, 4, 5, 6, for almost a month, 6 weeks. That is a month and 2 weeks. And now it is facing down, rejecting this area here. So we go to the daily to see a bearish storyline. Go to the daily. So what do you see on the daily, guys? What do we see on the daily? On the daily, we see a high, a low. This is a high here. Let me see. This is an equal high. It's looking about like an equal high. No, this is a high, a low, a high. This is a QM. On the daily, that is a QM. However, now this one is a little bit tricky. We have a supply zone up, this candle here. Remember I told you we entered a supply zone on the 4-hour. We have a supply zone up. We are expecting this price action to come and retest the supply zone, and by retesting that zone, it will be giving us a head and shoulder. I think you can see it. This would be a shoulder, this will be a shoulder, this is a head, and this will be another shoulder if it comes up here. Let me show you. If it comes up here and then drop, you see, this will be another head, another shoulder on the daily time frame. But the storyline has been already made. This is a high, then a QM sell. So we are waiting for a retracement for around here. people would say a retracement to the previous resistance standing to support this one here, but me, I would prefer to see an order block that is going to give me a supply zone and then to sell to the downward starting from next week. That is on JPY. So the storyline is already made, and I'm favoring sales over buys on JPY, despite the fact that it is making higher highs and higher lows. Me, I think JPY next week at around Tuesday, Wednesday, it is going to be selling. So if you drop down to the 4 hour, then we can be able to refine now. Now the 4 hour is very clear. Somebody shout hallelujah. 4 hour is very clear. 4 hour is very clear. You see, this is a high, a low, a high, a low, a high, and then we drop down, breaking this low, low, low. I have broken 3 lows on the 4 hour. This is 1 low, 2 lows, 3 lows, higher lows, high, low, high, low, high, low. We even created a mini head and shoulder here. So now, what I would want to see, I have no doubts this market is going to buy, but to sell, what I want to see first, we buy up to around this zone here to make a head and shoulder, and then sell down. That is what I would want to see. That would be the ideal scenario. However, we can just start dropping from here for no reason. We drop down, but me, I would want us to first buy up to here and then drop down, because the straight line is already made on the daily. The 4 hour is telling us here for the 4 hour it is very clear. So me, I would wait for price action to come and tap in this area. This is a demand zone. Come and this is supply zone. Come and tap here, which will also be making another shoulder, or the right shoulder, shoulder, head. Will be making the right shoulder, and then we pour to the downwards. Very simple. If I don't see something like that, I would let this trade flow. Why? Because we have a supply zone here, a demand. Guys, supply and demand disturbs me. We have a demand zone here that seems to be like price is reacting in it. You see, price is reacting in that demand zone. I told you the last candle before the last indecision candle before the impulse indecision candle, engulfing candle, create an imbalance there, and then we are going up, and this place also happens to be a support area. If I draw the line here, it happens to be a support area. We tapped, we went up, came back, played around, we went up, so we have come back. So it happens also to be a support area. So I think price is going to tap there and then shoot up. That is what I think. Then after shooting up, we reach here, retest, guys. We reach here, retest this supply zone, and then we go down. As we are retesting the supply zone, we're also making another shoulder for this 4 hour time frame. That is what I highly think that is going to happen. And if it happens, I'm in. If it doesn't happen, guys, I'm not in. So what do? We are going to enter for our sales here. Put the stop loss slightly above that shoulder, and then the target, the first level target, there, that is stop loss is 39 pips. This one you can enter 0.1 mini lot. The first level target should always be 100% retracement. When price reaches here, that is should be your first level target. That is a 1:4. Remove your profits and let like 2 or 3 positions run to the daily or the weekly target. What is the daily or the weekly target? The daily or the weekly target is the next supply zone, the next demand zone, which is around here. So the ideal target for this trade should be 300 pips. That is 1:7. 300 pips. However, price can even come up to the weekly target, which is where is it? Price can come up to the weekly target, which is the demand zone around here. There. That is 500 pips, and then decide to go up. And remember, when it comes here, it will be making another shoulder, the right shoulder for this left shoulder here and make the thing a head. Let me show you. So press, if it comes here, it will be making a shoulder. For this head, this is a head. Let me put the line chart now, it can be clear. This is a shoulder, this is a head. So price is here, and I'm thinking if it follows our analysis, then it will be dropping here to make another shoulder for this head, and then we shoot it up. Probably we can now go up to this supply zone up there. So guys, that is all for the analysis today. This video is too long, it is over now 40 minutes. I don't want to go beyond that. I know most of you want to be watching that long, but take your time and watch, because it is so helpful. It's going to be so helpful. Take your time and watch, and then you can learn something from it. It's already 40 minutes. I don't want to go beyond that. I hope guys you have learned something from the education content I have shared. Remember, this video is only for educational purposes. There's nothing like financial advice there, because I'm not a qualified financial advisor. So guys, that is all. That is all for today. I wish you all the best going forward to the next week. I hope you make those big boobs. Subscribe to the channel, and don't forget to like the video. Also turn on the notification bell now that I've given a trade. You can follow it and see how it is going to play out the whole of next week. Bye for now. Subscribe.